Hello, my name's Ben May from Oxford Economics. Over recent weeks, the key focus has understandably been the problems in the banking sector. However, we think that there is scope for upside surprises to global growth over the coming quarters, despite all that, if households were to spend more of their excess savings. So far, at least, we've only really seen households in the US spending their excess savings to any great degree. And our forecasts assume that Europe and Japan continues to be fairly unwilling to spend those. However, recently there's been one or two signs from the services data in particular of strength, and that could be tentative signs that households are beginning to become more willing to spend those excess savings. And to sort of assess the potential implications of a faster unwind of those excess savings than we've assumed, we've recently run a scenario where around 30% of those excess savings in Europe and Japan are spent over the course of the next 2 years. And what we find in that scenario is that if those excess savings are spent, then that would boost global growth next year from a little bit above 2% in our baseline forecast to growth of around 3%, delivering growth pretty similar to what we were seeing on average in the 2010s. But while that would certainly be good news for the economy, our model also suggests that that would provide something of a headache for central banks with higher inflation, and certainly would increase the likelihood of an even more cautious pace of policy rate cuts than we assume currently in 2024.